Good morning and a happy Friday. Welcome to today's episode of Morning Wealth. Three things that we will talk about. Technology powers ahead, some Fed speak, non-farm payrolls today, and what to expect. US stocks rallied a day after the violence in Washington dampened sentiment, buoyed by investor optimism for new stimulus and relative calm for the incoming Biden administration. About 70% of the companies in the S&P 500 rose. The Nasdaq jumped 2.5%. And the Russell 2000 gauge extended a 3-day advance to more than 7.5%. Treasuries fell, pushing the 10-year yields up more than 4 basis points to around 1.08. The dollar rose against every G10 pair, with the yen and the Swiss franc leading the declines. Bitcoin topped 40,000, oil advanced while gold retreated. Asian equity futures are mixed. Tech stocks led the stock market's gains, with chip companies notching some of the biggest climbs. Nvidia was up 5.8%, AMD was up 5.3%. Shares of banks broadly rose, with JP Morgan notching its biggest gains of major banks, up about 3.3%. Tesla in the meantime jumped 7.9%, pushing the electric car maker's valuation to $773 billion and making Mr. Musk the richest man on planet Earth. In other markets, the region-wide Euro Stoxx 600 edged up 0.5%. In China, the Shanghai Composite added 0.7 to close at its highest in more than 5 years. South Korea's Kospi rose 2.1% to a fresh record high. Hong Kong's Hang Seng slipped 0.5%, however. Shares of China's big three telecommunications operators listed in Hong Kong tumbled after NYSE reversed course for the second time in days and said it would proceed with a planned delisting. China Mobile, China Unicom and China Telecom dropped between 7 to 11%. Also weighing on the Hong Kong market were shares of Alibaba, which lost about 3.9%, and Tencent, which fell about 4.7%. The losses came after Wall Street Journal reported that US officials are considering prohibiting Americans from investing in the two technology giants. On to some Fed speak, some signs of optimism from the Fed. Thomas Buchan expects growth in the second half of 2021 to be robust after a bumpy start to the year. Patrick Harker and Charles Evans predicted the central bank may begin paring back its bond buying program as early as year end, though James Bullard said it's too early for such talk. Robert Kaplan dismissed suggestions that the Fed should intervene to slow rising yields, as that's expected to happen as the economy recovers. Most are quick to caution the expected rebound is contingent on the course of the virus while welcoming the vaccines. Just a quick corporate roundup. Micron's revenue forecast topped estimate and its profit beat. Walgreens Boots rose as retail pharmacy comparable sales beat. Bed Bath & Beyond plunged after same-store sales grew less than estimated, weighed down by its smaller chains. Lastly, it's Friday and NFP day today. For the first time in 8 months, the US economy may be adding less than 100,000 jobs in the month of December. We haven't seen numbers this bad since the harsh lockdowns in the spring. In fact, we wouldn't be surprised if there were net job losses last month. Many states like California restored restrictions, and according to ADP, the private payrolls declined by about 123,000. Which was much worse than the forecast of 88,000 positive. Taking a look at the arguments in favor of stronger and weaker payrolls, all signs point to a soft release. Aside from ADP, the employment component service of ISM dipped below 50, a sign that more companies are shedding than adding jobs. Jobless claims also spiked at the end of the year, and while the manufacturing sector continues to chug along, those numbers are separated from NFP. The big question is whether investors will shrug off a soft release just like they have every piece of bad news we have had this year. The rallies in currencies and equities will probably continue as long as job growth is positive, but a negative read may be hard to ignore, especially at the onset, is what Kathy Lien writes. Vaccines are being rolled out, but it will be a long time before large swaths of the population are vaccinated. As a result, lockdown measures will remain in place and could toughen before they are eased. That's the update. Stay safe and healthy. Have a lovely weekend, and I'll speak to you on Monday. Thank you.